What has changed now? Post the Jackson Hole meeting during last week of August in the US, markets have been a bit more hopeful because the federal chair hinted that Fed could start rate cuts soon, and they seem to relatively be not so worried around inflation. The markets were very happy to hear this, and expecting more rate cuts, gold went up. Now remember that while gold is up more than 10% from mid August 2025, most of the rise has happened after Jackson Hole conference. But there's one more thing that has happened. Labor market numbers in the US. US labor market data showed a much lower pace of job additions in the United States, and also the historical numbers have seen a sharp downward revision. After this, markets expect the Federal Reserve to sound much more dovish and deliver more rate cuts than the Federal Reserve had earlier projected. Last but not the least, September 17th Fed policy is a quarterly policy where the Federal Reserve releases forecasts of its board members on rates, inflation, growth, unemployment, etc., not just for 2025, but 2026 and 2027 as well. So if the market's guess turns out right and the Fed is seen more dovish than they expect or as dovish as they expect, it would be fair to say that gold prices would remain in focus for the near term. However, if the markets are disappointed from what they hear on 17th of September, it would be very interesting to see how they normalize. As of now, the markets appear to attach a 92% probability of a 25 basis points Federal Reserve rate cut on the 17th of September, a 75% probability of another 25 basis points rate cut in the Federal Reserve's 29th October monetary policy, and a 64% probability for yet another 25 basis points rate cut for the Federal Reserve's 10th December 2025 policies. So, in short, they're expecting 75 basis points of rate cuts with varied probabilities for 2025. Now, 1 month ago, these very probabilities of 92, 75, and 64 were 86, 55, and 45, respectively. Now, one must remember here that all these probabilities, they keep changing every single day based on incoming data and news flows.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.